Today we're looking at the S&P 500's technical setup in front of the CPI data and the latest FOMC meeting, both due out tomorrow, Wednesday, June 12th. So let's talk about the setup. It's all about inflation, as we know, what the data is, more importantly, what the Fed thinks about it, and what they're going to tell us about their actions going forward. So as we know, the market has been in an uptrend going back to at least last October. We can pull it all the way back to the beginning of October 2022. But along the way, we've seen a number of negative reversals that a lot of people thought could lead to a major momentum shift. So recently, there have been 4 different bearish engulfing patterns, and here they are. And so 3 of the 4 were inflation related. So going back to July 27th of last year, remember that came the day after a Fed meeting, which happened to be the last Fed hike of the cycle. And so the point being there was that was good news, but it was priced in, and it came after a multi-month rally of about 20% for the S&P, and of course led to the 11% 3-month decline that followed. Of course, the bottom here in late October and the slingshot higher led us to the end of December. And this bearish engulfing pattern was actually attributed to zero-dated options, but at the same time, there was still concern that this market has run its course and that there was still potential for the Fed to extend what they thought could be cuts in 2024 later if some of the reports suggested that inflation was coming back. But that did not lead to much downturn, as we know, except for the last few days of the year, but really it was about a 4-week consolidation before the next up leg took hold. That brings us to what happened on April 4th. Back then, as we will call, Cappelleri basically alluded to the fact that we may not get any cuts this year. And after the market had gotten kind of exhausted short term at the end of March, that led to the biggest downturn we've seen since here, down 6%. But again, relatively short-lived. And that brings us all the way to May 23rd, where the market was rallying, of course, after NVIDIA reported very good numbers and was spiking higher, and then announced the 10-for-1 stock split. But the next morning, there was a hotter than expected manufacturing survey, which turned all of that good feeling for the market into a very big negative reversal, or the last bearish engulfing pattern. That too was short-lived, and now we're sitting right near the highs again. And so it's really about, of course, what the inflation data tells us, but much more about the reaction. And that is attributed to a lot of times the positioning of traders and where the market has come from. And so with that point in mind, it's important to look at the short-term trends. And we do this by paying attention to this 2-hour work, which we've talked about before, but it's been extremely helpful along the way. In the fact that from the October low here all the way to the March high, there were 7 different mini rallies from our perspective, all between, say, 3.5% and 7% in the very beginning. Each one of them was able to produce higher highs, and then the pullbacks, higher lows. And on a 14-period RSI perspective, most of the time we got overbought conditions, which then got normalized as the market consolidated, and the pattern was repeated over and over again. Now, that pullback from March to mid-April changed that just a bit, but at the same time, once the RSI, or once the market started rallying, the RSI started to move higher once again, what occurred? Now we've had 3 different rallies between 3 and 6%, almost all of them producing overbought readings once again. And so what does that tell us? It tells us that we could be at the top of this short-term pendulum once more and due for some more consolidation, regardless of what happens with the news. And we know we can get a much bigger reaction to any news item, especially related to inflation. But the point being here is that the market could be due to pull back anyway, regardless of what comes out on the headlines. So it's really about what the market does with the next gut punch, if and when it comes. And so another way to look at this, which we continue to stress, are the trading boxes, because we think this does a very good job of putting the price action in context, where it's really just been about consolidating, breaking out, consolidating, breaking out, consolidating, breaking out over and over again until we got to the negative reversal back here in March. But So far, there was only one time that we had a resolution to the downside of a trading box since the October low here. That brings us to right now. Look like we could be getting a breakdown and a downside target hit back after the market faded in May. Of course, that was short-lived, ended up being a false breakdown or a bear trap, now trying to break out from the upside. And so what if that fails? Does that mean all of this work we can forget about with trading boxes? No. A lot of times we have to redraw the lines like we do for classical patterns as well. So it could mean, if that were to occur, if we were to get a false breakout, that we just have to look at this as a longer consolidation pattern. And like we've talked about before, sideways action can be frustrating from both sides, but we've seen what that does in terms of forming more bullish patterns, creating bigger foundations of which they can leverage, especially in the summertime when seasonality can be tricky, even though it's been better in election years like we are in right now. So in terms of live patterns for the S&P 500, we come into the number with 2 live bullish patterns for the S&P. This one was tested at the end of May, beginning of June, but still held. And so this target is up near 5,500. So still viable, of course, and it's about 2.5% away from the breakdown zone as well. So we still have some wiggle room to deal with. And we haven't had a 2% decline in quite some time, so I don't expect that to happen immediately, but we've seen pullbacks of greater than 2 or 3%. So it's a possibility that it gets tested again in the near term. And as we just talked about, it's all about how the market reacts to the next dip at this point. Bigger picture, 6,100 continues to be the highest target that we have, and we expect this to be in play for quite some time longer, considering we're still 10% above the breakout zone near 4,800. And so we're always looking for potential patterns that are in play as well. And from a bullish standpoint, this could be called a very short-term, a bullish pennant pattern, where considering that things have been so quiet leading up to Wednesday, more likely than not, the volatility is going to increase. And so one way or the other, this is going to get resolved to the upside or get negated. So we'll see how that plays out. And to keep in mind that something very similar was in place at the end of May. It looked like a bullish flag pattern. It appeared that that would get resolved to the upside after NVIDIA reported great numbers, but we know that latest reversal on May 23rd caused that not to be the case. Now, what about on the bearish side? Well, at any point, a move to new highs is going to stop. That's going to end up being a topping pattern or the top, which everyone keeps on looking for, but of course has not happened yet. And so we're not suggesting that this is going to be the one, but tracking how bearish patterns play out has been extremely helpful because they just continue to fail. And so for this to actually work out right now, we have to see a pullback that gets us back down to the level right below 5,200, right where that low was May 31st before the reversal, and then break down through it or have a failed rally, right, that creates a lower high and then another breakdown. Because if that doesn't happen, it's just another failed pattern. And remember, we had an even bigger one, an even more clearer one, fail back in April, where it appeared that this was set up for just a very big breakdown, or at least an attempt, never got there, right? This race shoulder was never completed, and then it was negated, just like all of the ones we've seen, especially the biggest ones from October 2022. That's what we have for today. Don't forget to subscribe, check out these videos, and talk to you next time. Thank you.